Uh, some people like to say, thank goodness it's Friday. TGIF, right? So, hope you're having a great Friday. Hope it's happy and prosperous and healthy, full of life and liberty for you, and that you're doing good things, most importantly, that you're doing good things as much as possible. But I realize some people, they don't have that freedom. So, if you're living a life where you don't have that freedom, I sympathize, and I hope that you will have the freedom to do good things sooner rather than later. But what is it that I wanted to mention to you? Well, you can probably already guess by the title of this video. Right? It's should be. Oh, hey, how you doing, buddy? Hello, hi, good boy. Some cats are funny. So, as the title of this video mentions, 100K Bitcoin. Will that happen before the end of the traditional trading week, which happens to be today? Right? It is Friday, so there's a limited time on the time left until trading weekends. The question is, will everyone's favorite orange coin hit 100K today? Well, if you look at the VRE levels, you'll see that the VRE is not very, very tight today. It's still underneath the 2% threshold if you're looking at the central daily range. In terms of the VRE width relative to the asset's value, so it's about like 1.4% of the asset's value, so it's still, technically speaking, a trending day. And that means that there is a decent probability, right, of seeing at least some nice trending moves on the 15-minute trade time frame, and others as well, but certainly that one. Obviously, on very low time frames, 1 minute, etc., even 3 minute, 6 minute, you're likely to see some on any given day, just because of the nature of different time frames. But yeah, on the 15-minute, there certainly could be some nice trending moves today. And last I looked, about an hour ago, maybe half hour ago, Bitcoin was trading around 98 and change. So, I mean, if it's less than 2K away from 100, it's less than 2% away. Not a very big move to move 2% in a day. And the random round number there that everybody keeps talking about is actually just below, or just slightly below, the first daily sell level of the VRE above the top of the central daily range. Right? That's just not very far from where it currently is. So there is certainly a decent probability, if it makes a move, it will go there. Will it stay there? We'll see. There's also a pretty good probability, because of the way people are and their silliness, and if you go look at the heat maps, you can see it, that a lot of people are going to put sell orders in at 100K. Right? Some are already doing it. They're already waiting to sell at 100K. Okay. I mean, look, it's the first daily sell level. Why not? But most people don't know that it's the first daily sell level. I could just tell you that because it happens to be the first daily sell level. on the VRE. There's also Laplace distributions and normal distributions around there, right? So that's also distinct areas of taking profit and selling. And the thing is, like, look, what were the three significant all-time highs in since 2000? Well, ever. Okay, like $1, $10, $100, $1,000, and then $20,000, and then almost 70. Okay, didn't quite make it, maybe on some exchanges, but basically almost 70. Right? And now 100. Will 100, now these are not statistically significant numbers. These are numbers that happen to be roughly near where the all-time highs were. They're not exactly where the all-time highs were, but they're near where the previous all-time highs were. And they mark certain areas in the psyche, not of the machines that trade the assets, of the human beings that fool themselves into thinking that these random round numbers matter. They don't. Okay, they don't. When the asset tapped out at 1,000, it wasn't exactly 1,000. It's close, but it wasn't exactly 1,000 on every single exchange. Right? When it went to 20,000, it didn't actually get to 20,000 on most exchanges. Right? It got to like 19,975 or whatever on a lot of exchanges. 1998, 1905, 1907. Some of them went over 20, right? In South Korea, a bunch of them went over 20. My point is, these are round numbers people like to just associate in their heads. A, because they suck at math. And B, because it makes them easier to refer to later. And it's okay that they suck at math. Nothing wrong with that. There is something wrong with that. It shows that, unfortunately, for whatever reason, their math education wasn't great, either because they didn't have great teachers, or because they didn't have a great education system, or because they didn't learn well, or some combination of all three of those things. And math is important, so it's terrible when people suck at math, but it doesn't make people bad just because they suck at math, right? So, what can you actually garner? Right? What can you learn from knowing that people just use round numbers to kind of plot out different places inside of their head to mark significant areas on the random timeline of an asset? Well, you know, when there are certain round numbers, people will behave certain ways around those numbers. If at 100 grand, it happens to go down a little bit, people in their head will associate the 100K with, oh yeah, when I went to 100K, that was the all-time high. And then, if it goes into a bear market or whatever, then yeah, it'll be that was the all-time high before that bear market, 2025 bear market, because we're now towards the back half of November already. So another month already in 2025. If it gets to 100K and then stays above it, or even busts through it and goes up to like 105, 110, 120, 150 in the coming days, weeks, and months, then it'll be seen as just another stepping stone on the ladder to the quote-unquote all-time high that will be reached after the current long-term cycle of buy pressure ends. As you know, as an intraday trader, you could care less about long-term cycles. But psychologically, people make these silly mistakes in their heads. They get wrapped up in their heads about nonsense. It doesn't exist on the market. It exists in the heads of the people who are engaged in the market, but your psychology does not enter a trade. Your psychology isn't capital in a long or a short, right? It's just in your head. And it does not matter whether your psychology is right or wrong. It matters whether or not your trade is right or wrong, right? It matters whether or not your trade is winning or losing capital for you. That's what matters. If you are losing capital most of your trades, then you should probably stop trading and either learn to trade better or do something else. If you don't know how to manage your risk, you should probably do something else. It's an everyday event, trading. At least every work day if you're trading only 5 days a week or whatever, right? It's not a you do it once in a while kind of thing, really, if you want to be, actually extremely good at it, right? Or even just very good at it. If you want to be an excellent trader, you can't just do it once in a blue moon. Now, you might be that 1 in a million or 1 in 100 million people that just happens to run successful trades, very lucky every time you run them, and you only run like a trade once in a bluish blue moon. Who knows? Maybe you are, right? But statistically, you're not, right? Meaning, if you, the person listening to this right now, if you say, "Well, I am a statistical blue moon outlier," congratulations. Every other person listening is not. Okay. Why? Well, because there's only so many outliers, right? There's only so many 1 in a billions in a planet of 8 billion. There's only about 8 people that are 1 in a billion. In a market of 100 million traders, there's only going to be 100 1 in a millions. So the odds of being a really rare statistical outlier and consistently throughout your life, maybe you only place 10 trades in your whole life, 100 trades in your whole life. And somehow 90% are big wins and the other 10% are tiny losses. Maybe you have 100 wins and no losses. And you figured out some magical formula that works for you. Well, that's fantastic. It does not mean that is how everybody can do it. Because try getting everyone else to replicate the way you do things. I think my video feed has frozen again. I don't know why this is happening on YouTube, but it's happening. Anyway, my point is, don't get stuck on non-mathematical, quantifiable methods of trading. Just because an asset hits a round number does not mean that round number is the proper way to trade that asset. Okay, if Bitcoin hits 100K today, yeah, there's a probability it'll go down because of sell pressure. There's also a probability it'll go up because of buy pressure, right? There are also probability levels above it, just as there are probability levels below it. There are always probability levels to the upside and the downside. The question is, do you know where to enter and where to take profit? Okay, well, if you see the asset has gone down to certain levels on the VRE and is ready to make a move up, well, that's a good place to long it, generally speaking. If all the other indicators are telling you it's going that way, if the volatility is saying it's likely to go up, if the entropy is saying it's likely to go up, if the variance is saying it's likely to go up, if the returns oscillator says it's likely to go up, if the RMLRs are indicating that, right, that it's in distribution or mean reversion. So keep that in mind, right? Keep those levels in mind, keep those indications in mind. And don't scam yourself, don't fool yourself thinking that just because it gets to some round number, some magical thing has to happen. It won't. What's going to happen at 100K is the exact same thing that happens at every other price. The price is going to follow the returns. Okay, so if the returns are super high and they're starting to contract at 100K, right, and they're contracting on positive correlation, for example, very likely price action will follow to the downside. Or if the returns are at 100K and the returns keep rising as the correlation goes negative, price will likely drop. Or if the returns are not super high and they just keep rising and rising at 100K on positive correlation, price will probably follow to the upside. And if the returns get to 100K and then start to contract, the correlation price will continue to rise. So, question list. I use the VEPs because they work. Patterns break, maths don't. All right, that's it, guys. See you. Happy trading. Cheers.